You need to make sure that you set up your LLC properly so you're afforded all the benefits of the LLC that you thought you were receiving. Now, this is something a lot of people mess up, so I'm gonna go through the process to make sure you understand how to set up your LLC properly. And this is part 2 of my 5-part masterclass series on LLCs. Make sure you're subscribed to my channel because I'm gonna be going into all those other details you're gonna need to know. I'm Matt Sorensen. Let's build wealth. All right, now there's 4 things you're gonna need to set up your LLC properly. The first is articles and certificate of organization. Second is your tax ID and EIN and the proper tax classification. We'll get into more details there. Next is your operating agreement and initial minutes that clarify ownership and some other key asset protection issues. And then fourth is choice of tax status. There can be additional filings depending on whether you have partners or you're an operating business versus an asset holding business. We're gonna get into that here. So first, let's start off with the articles and certificate of organization that you need to file. Now, what this is the actual filing to the state that says, hey, I want to be an LLC. Here's my name. Here's who's gonna manage the LLC. Here's the address. Here's my registered agent that's gonna get legal notices. This is the official filing that has certain requirements with the state where you're setting up the LLC. Now, you have a few options when you're filing the certificate of organization or the articles. Different states call it different things, but the first choice you have is what state to even file this in. And a lot of people hear, oh, you should do it in Wyoming or you should do it in Delaware or Nevada. That's BS. You should set up the LLC in the state where you're actually conducting business. If you're conducting business in Indiana, you should have an LLC in Indiana. If you're conducting business in Florida, you should have an LLC in Florida. If you live in California and you have a rental property in Ohio, you're conducting business in Ohio, okay? We're setting up the LLC in the state where you're actually conducting business. If you set up the LLC in the state you live, let's say Florida, and you have a business or a property, a rental in Ohio, you're gonna need to register it into Ohio anyways. You need to register the LLC in the state where you're actually conducting business. So why pay 2 different state fees? As a lawyer, been doing this for 20 plus years, we've never understood this. Make sure you're just going to the state you're actually conducting business in. The one caveat to that is there is Wyoming and some certain strategies for privacy or double layer asset protection called charging order protection. I've got another video on that. Make sure you go over to that if you want to look into the Wyoming LLC and the benefits there. But 9 out of 10 clients in our law firm, we're just setting up the LLC in the state where they reside. All right, now the second choice on your articles or certificate of formation is this going to be manager managed or member managed? Now, we always want to go manager managed with our LLCs. The reason being is I don't have to disclose ownership. No one knows who owns an LLC on a manager managed entity. I only have to disclose who the manager is. And the manager is like president of the corporation. They don't have to be the shareholder or owner. That's just the person listed with the state that has authority to act for the entity. If I did member managed and I list myself as the member, then it's very clear that I'm the member and owner of that LLC. So I'm losing some privacy. Because of that, we typically prefer manager managed entities. There are some strategies on privacy where you could have a Wyoming entity serving as the manager so nobody knows it's you in the state where you're registering the entity. But for a lot of people, particularly if this is your business, you're out selling goods or services, or you're the entrepreneur and the face of the company, we don't really care about privacy. We're just gonna list you as the manager of that entity. Now, the next thing you're gonna need is a tax ID or EIN, employer identification number. Now, this is a number that comes from the IRS. Now, this operates like the Social Security number does for you personally. This identifies the LLC as a separate entity for tax purposes. It will get 1099s and other tax reporting for the business instead of it going to you. You need to get a separate tax ID. When you're setting up a bank account in the LLC's name, the 2 things every bank asks for is we want to see your certificate of organization or articles for the LLC, and we want your tax ID or EIN. They want that number because they associate that with your entity, and that gets the tax reporting as opposed to your personal Social Security number. Now, to file this, you can do it online with the IRS. Our law firm, of course, is doing it. We're setting up entities for clients. When you're filing this, you also need to decide how you want your LLC to be taxed. Now, there's sole proprietorship status, partnership status, S corporation status. I'm going to come back to that here in the final point about making sure you have the right tax selection for your LLC. The third thing you need to make sure your LLC is set up properly is an operating agreement and a set of initial minutes. Now, if it's just you as the owner of the LLC, we still want to do an operating agreement to say you own it 100%. If you got partners, it's even more critical because we want to be clear who the partners in the LLC are, how much ownership do they have, and what is their responsibility and roles in the LLC. This happens in the operating agreement and the initial minutes of the LLC that are outlining and approving all of these things. Final point here is your choice of tax status. When you're setting up an LLC and you're getting your EIN, you need to decide, how do I want my LLC to be taxed? A lot of people mistakenly think LLCs save taxes. LLCs do not save taxes, okay? But your tax status election for your LLC may make a difference on taxes. So you need to understand this very, very critical point. This is probably one of the things people screw up the most is they mistakenly elect the wrong tax election and they end up paying the IRS too much money. Now you have one critical decision here. Do I need to make an S election for the LLC and be taxed like an S Corp? Or should I just be taxed like a sole proprietorship? Now maybe you have partners, you're taxed as a partnership, but the really critical thing here is, should I be taxed as an S corporation? Now, we want you to file as an S corporation if you are conducting an ordinary income business where you're selling goods or services and you have more than $50,000 of net income. If you hit that bucket, your LLC should be taxed as an S corporation. If you have rental properties, your business is only making 10 grand a year, even though you're selling goods or services, you have a side hustle, don't worry about the S selection. It doesn't matter for you. But any of you small business owners making 50K or more, main hustle, side hustle, this is net income. You will save money by doing an S election. Here's how it works. In an S election to an LLC or just in an S corporation itself, what happens is when you are paid income, you get to divide that income into salary and into dividend or net income. And that benefits you because it's an opportunity to save on self-employment tax. Let's say you made $100,000 a year, okay? This is after all your expenses, you made 100K. And let's say you're a sole proprietorship. You just did an LLC, taxed as a sole proprietor, you didn't file the S election, the 2553 form with the IRS, and you just take that 100K. Well, how much self-employment tax do I pay? You pay 15.3%, okay? This is Medicare and Social Security. That's the total tax that you end up paying. On 100,000, that results in $15,300 of self-employment tax. Guys, this is before you even pay federal income tax, okay? This is just Medicare and Social Security because you're self-employed. Well, that kind of sucks, all right? I've got $85,000 left to pay myself here, and I still got to pay federal income tax on this money. Well, if you're doing an S corporation, paying yourself the same $100,000, what happens is in an S corporation, you're allowed to pay yourself a salary, which you do have to pay self-employment tax on, but another portion of the funds you can pay yourself as net income or dividend profit out of the business, which is exempt from self-employment tax, which is where you get tax savings. So for example, if you're making 100K, maybe we take a $40,000 salary, which you take as a W-2, and the other 60K, you're gonna pay yourself as dividend or net income. Now I pay 15.3% over here on that 40K, and I pay nothing in self-employment tax over here. And now the savings here is I'm only paying $6,000 in self-employment tax over here versus paying $15,300. This is where I saved. I didn't pay 15% over here. I didn't have to. Okay, that saved me $9,000 in taxes to the federal government. This is $9,000 you can be saving every year if this is your income level. So make sure you understand the S corporation tax strategy when you're using an LLC. When you have an LLC, you can elect to be an S corporation. Now, maybe year one, you don't need it. Maybe in year one, you're like, I don't know that I need this. I might make 10 grand this year, but year two, I'm gonna bump up and I'm gonna hit this 50,000 net income. Well, you can make the S election status in that second year, okay? So you have some optionality here, but you need to make sure that you understand that because it's more money in your pocket if you get the tax election right. And if you jack it up, you're gonna be overpaying the IRS. So make sure you're focused on this and paying attention. All right, now the last thing here I wanna mention is you don't need to file a beneficial ownership information report to FinCEN and the Department of Treasury. This is a new thing that came out a couple years ago where you had to make a filing for your LLC or corporation to the federal government disclosing ownership. You don't need to do that anymore, okay? The Treasury Department has said we're not enforcing it against US corporations and LLCs. There's been cases in the US Supreme Court on it going back and forth on this. So bottom line, don't worry about the FinCEN BOI filing. That may come back in a later administration, who knows? But in 2025 right now, don't even have this on your radar. You don't need to stress about it. Skip that step for your LLC. Now remember, this is part 2 of my 5-part LLC masterclass series, so make sure you're subscribed to the channel so you can get access to those other videos, as long as other tips on protecting your assets, saving on taxes, and building wealth. I'm Matt Sorensen. We'll see you next time.